morning. You're watching First Trades. We've been discussing a couple of cues that one needs to keep an eye out for. But let's also get Nischal Maheshwari to discuss the outlook for the markets. He's the head for research at Wholesale Capital Markets at Edelweiss Financial Services, and he's joining us from New York, where the Edelweiss India Conference 2013 is underway as we talk. Nischal, let's talk about your conference first a little bit. What kind of corporates are you actually profiling, and what's the outlook as far as the markets also go?
I think, Priyank, it has been quite a good turnout. We have corporates coming across from the banking sector. We have corporates from the pharma, the IT, even on the pesticides. So we have got Rallis India here. So I think it's been quite a good profile of corporates which have come here. And simultaneously we are seeing very good response also coming from the investors, both for the next in the next 2 days.
Nischal, how interesting with some of the biggest foreign investors that are present there. What's the mood like currently in regard to Indian markets, and what kind of conversations have you been having with them?
They have been quite positive. I think they are looking at opportunities. Some worries are there, especially on the current account deficit side. So some macros are still worrying them, but I think they are looking at opportunities across sectors, and especially on the consumption side, they are quite positive, and they are looking to invest into the country.
Nischal, in 2013, markets have seen a pretty good inflow. We're talking about $15 billion so far. What are your expectations? Can this kind of a deluge continue?
I think so. There are two things which support that argument actually, and one is that you are not going to see a quick withdrawal of the QE, though the numbers coming out from the US, both on the housing front as well as on the employment front are quite strong. But most of the people believe that the QE is going to last the full year. So I don't see any reason fund flows coming out from the US drying up. The second thing remains to be on the Japanese front. I think there also the Japanese central bank actually, they have been increasing the balance sheet size, and they are also looking to pump in more money into the system. So I think these two large countries will keep on driving the flows into the market.
Sure. Now we've seen nearly all the earnings that have come out for this quarter, the fourth quarter. How have you sort of evaluated corporate India's performance, and what have been the highlights for you?
I think two or three things came out pretty good. Basically, one was the top line was a bit disappointing. So if you look at on the Sensex or a broader 200 companies also, the growth was on top line close to around 4 to 5% only. So definitely there is an issue as far as demand is concerned. Margins have started to go up. Now that is a very interesting phenomenon actually, that you are having one on the top line, the top line is not doing very well, but the margins have started, especially on the EBITDA level, to once again inch back. So people have stopped investing into the future growth, and they are cutting down on expenses, they are cutting down on advertisement, they are cutting down on sales related promotions. So I think that's where your margins have started bottoming out. So to think very clearly, though the top line is still some time to come out, will take some time, more time to actually come back. But definitely I think margins front you are seeing an uptick clearly out there. So these are two things which you take away. The second thing comes back that still the corporates do not have the pricing power. And that's why you are seeing on the gross levels your margins may not be as strong as you would have expected. So on a gross level the margins are under pressure, but on the EBITDA level the margins are improving, given that you have the cost controls there and you are trying to control the cost.
Nischal, just hold that thought. It's time for us to take a quick break right now. When we come back, we continue our coverage regarding the Edelweiss India Conference 2013, as well as get a couple of sectors to discuss with Nischal as well. Coming up in 2 minutes.
First Trades, presented by BSC Invest.
All right, welcome back. You're watching First Trades on Bloomberg TV India. We've been in conversation with Nischal Maheshwari, Head of Research for Wholesale Capital Markets at Edelweiss Financial Services, who's joining us from New York itself, where they're having their Edelweiss India Conference 2013 itself. Nischal, now what's the outlook for the second half of this year itself? When we talk about the markets, do you think we'll actually be at a better position by December end?
That is, I think, a question mark actually, Priyank, to be frank with you, because as you approach the second half, you will also approach the elections. And as you go closer to elections, I think things are going to start panning out. More clarity will come that who's going to form the government in the current, in the 2014 elections. And if you look at right now, the sea voter election, the polls which had been just conducted, they are very clearly mentioning that there is no clear direction as far as both the larger parties, the UP or NDA, to form the government, because the regional parties are going to be the major beneficiaries in 2014 election. And if that happens, I think the uncertainty in the market will keep on going up. So I don't see that the market is going to hit a new high in the second half, though there would be improvement as far as the economy is concerned. But the uncertainty from the political side will start going up, and that's why I believe that the market would be range bound. I don't see market breaking 5500 on the lower side, but breaking out of 6100, 6200 also on the upside also seems to be limited.
So we're talking about a range then. In that case, what's the strategy? How to play this range in terms of the themes or sectors that we can look at for the second half of this year?
For the next 12 months, I think some of the, there is one of these sectors basically which is media. I think that is a long-term bet in the country, especially that the only policy which has really got implemented in the country is digitization. So I think that's a long-term bet, both in terms of you should be investing into broadcasters as well as into the cable players, because everybody is going to benefit. That's a huge upside, and you are talking about $3 of an as ARPU, which is extremely low, given that any Indian family which goes out for a movie spends close to around $20 just for one outing, and here you are getting full month entertainment with 200 channels at $3 a month. So I think that is these things are likely to change, and I believe that the ARPU itself will double in the next 3 years itself. Plus, as the analog cables changes to from as the digitization takes off, which has happened in the tier 1 and tier 2, so 2 categories of around 40 cities have been completed. Tier 3 and tier 4, as it gets completed in the next 1 year, I think that's going to be phenomenal upsides. So this is one theme one can play in India for the longer term. The other themes I still continue to believe are more defensive. I would still continue to put my money into consumables, some of the private banks and the NBFCs, and pharma. I would as yet avoid industrials and construction. So largely anything to do with the revival of the economy, especially on the capex side, I would want to avoid, because I don't see any signs of that happening right now.
Sure, sir. Let me ask you one sector that's really been on focus over the recent times, that's been oil and gas. Looking at the way there's been some clarity emerge as far as subsidies concerned, and the kind of news flow from Reliance Industries as well. What's the call as far as the sector goes? Would you play the downstream or the upstream side?
Definitely, I think Reliance is one point out there. They have a lot of value in the stock. If you look at it on the GRMs front, they have been able to maintain the GRMs at around $9 a barrel. Secondly, the recent finding, especially on the oil and gas side, has been quite phenomenal. According to us, this find itself adds close to around 29 rupees to the NPV of Reliance, taking it up from 1007, which we had a price target earlier, to around 1045. So I think Reliance still has a very good way to go forward. The second thing about Reliance is their investments and ramp up as far as the retailing in the country is concerned. They are the second largest retailer right now, and they have broken even last quarter. So I think both these stories are doing pretty well. So Reliance is one of the stock I would like to play out there. Then the other story remains to be that the diesel continues to be, the subsidy continues to be passed on to the end consumer, and I would like to play ONGC out there. Now ONGC has got two upsides. One is from the diesel deregulation, and the second one is the gas price increase. So which will happen in FY14 March. So I think that's a good story to be played.
All right, Nischal, thanks so much for joining us, and all the best to you, the India Conference 2013 in New York as well. That's some perspective coming in from Edelweiss.
That's right. We'll take a very quick break. Our market conversation continues. We'll have VK Sharma and K. Subramaniam joining in on the other side. Let's see how this Friday is shaping up.
First Trades, presented by BSC Invest.